Now, I think the biggest thing here is that people get concerned that their student loan debt is going to prevent them from owning a home. Their student loan debt is going to prevent them from making their monthly payments, or their student loan debt is going to prevent them from saving the money that they need to buy a house. And ultimately, that's just not true. Welcome back, guys. So it's Mike Frank, Berkshire Hathaway, Frank Oliver and Company, coming to you from the comfort of my own home, as everybody is doing right now because of Corona World. I want to talk a little bit about the program, getting approved, getting down payment, getting closing cost assistance, and everybody going on with student loans and debts. The program here is real estate. We want to be the people that you choose to represent you throughout the purchase process. The acquisition is really important, and you want to have somebody to represent your best interest. So for us, we want to take into account the questions that we get asked and help to answer some of those things for you guys on a regular basis. And here we have 7 questions, 1, 2, 3, 4, 5, 6, 7, yes, sort of like 6.5 questions about student loans and how it's going to affect the capacity to purchase a home. So, first question is, will my debt of student loans affect my chances of getting an approval? Yes. No. Maybe. It really depends on your current circumstances, right? So the debt is going to be counted against you as your income to debt ratio. It's one of the factors that every lender takes into account when they're helping you get pre-qualified for a home. They're going to take into account your income and all of your liabilities, including your debts, and calculate what kind of payment you could afford according to the guidelines for the program that you're applying for, right? Different programs have different guidelines. Different programs have different regulations, whether it's FHA or conventional or VA, USDA. There's so many programs out there, and we want to talk about your specific circumstances. So will the debt affect your chances of getting pre-approved? Of course they will. It's a factor that goes into the process, and it's just like everybody else, whether you have a student loan debt, a car debt, credit card, outstanding debt, they all go into calculation. So it's not something that's going to preclude you from buying a home. How does the loan affect your credit score? That's a good one. So people often wonder, if I'm making payments or I'm deferred payments on my student loans, how does that affect my credit score? Well, again, it's the same as every other deferred loan, every other payment plan that you have. If you're making the payments according to the terms that you have, you should be carrying a pretty good credit score. Now, if this is the only line of credit, maybe you want to talk to your mortgage lender about getting your credit into a position that would be more beneficial for you. But ultimately, your student loan is going to affect your credit score in the same way that a credit card bill will. If you pay it, it's going to go up. If you don't, it's going to go down, right? In the end of the day, make sure that you're taking care of your debts and your liabilities, because ultimately that's what you want to make sure to protect yourself for the future. Third question, is my debt to income ratio a large factor in how much I will get approved for? Yes. Again, going back to the first question, we're going to talk a little bit about what kind of liabilities you're carrying. If you're carrying $1,200 a month in student loan debt, well, maybe you could refinance or restructure or get into a more affordable payment plan. Maybe you could take a loan with a higher debt ratio. There are debt ratios up to something like, don't quote me, don't yell at me, like 57%, even higher. There might be a couple loan programs that are outside of government subsidized that would go even higher than that. The biggest one is when you're on a deferred payment plan, certain loan options will take those deferred payments into consideration in different ways. I don't want to get into too much trouble with that, but your mortgage lender is going to be able to help you identify how your current loan program is going to be affecting your debt to income ratio as pertains to getting pre-approved. Should I wait to pay off my student loans before I buy a home? Basically, should you wait to pay off your student loans before you buy a home? And I would say maybe not. Maybe you should. It's really going to come down to, again, your mortgage lender and the best program for you. Oftentimes, if you have $4,000 or $7,000 in student loan debt, maybe it's worth it to just pay that off, wait a year and pay that off. But oftentimes, if you had $7,000 in student loan debt or $27,000 in student loan debt, there might be a program out there, which there is. It's called the Smart Buy program in the state of Maryland. You could take advantage of the Smart Buy 2.0 program, and that 2.0 program is going to allow you to wipe $40,000 of student loan debt with the acquisition of a home. Of course, you have to qualify for the loan. There's different terms, there's different restrictions and regulations, but you can take that $40,000 and pay it off. So for example, we have a client trying to do that right now. He has a $44,000 student loan debt. So he's paying $4,000. The state is giving him $40,000. He's also taking advantage of another subsidy program. So he's getting an additional $5,000 from this program in down payment assistance. So he's actually getting $45,000 to support his acquisition of real estate. And in the end of the day, he's got to take the specific loan. He's got to qualify for that program. And 2 weeks after the loan is funded by his lender, those student loans will be paid in full. So there goes $40,000 of his debts gone. Certain regulations, restrictions apply, of course, but in the end of the day, should you pay off your loans? Well, I don't know. It really comes down to that very specific conversation between you and your mortgage lender to figure out what's going to make the most sense. I can't afford student loan payment and a mortgage payment. Well, we're going right back to the same questions. In the end of the day, your mortgage lender is going to make sure that you qualify for the payments that you're carrying before they fund you a mortgage. They're not going to give you a mortgage that you just can't afford. And if we can take advantage of the student loan programs that are out there to offset some of those costs, it may help you to facilitate getting a mortgage that does make sense for you. Whether it's a higher mortgage or a lower mortgage, buying your first home is tricky, but ultimately what you want to do is you want to get pre-qualified by a lender that's going to help you align these questions so that you can make sure that you're protecting yourself in the long run. Last question. So question 7, wouldn't renting be cheaper? Well, I think that's foolish, right? Because even if renting was, let's just say $1,150 a month. Let's say that you were in a shared unit and you were paying $700 a month. Well, heck, if you're paying $700 a month with 2 other people, your rent is $2,100. And the home that you could afford for $2,100 might blow your mind. And if you took those 2 tenants, move them into your new home, well, shoot, they're going to pay the same thing, you're going to pay the same thing, and you're going to be building equity in your investment. The other thing to remember is that you do get mortgage interest deductions. Don't quote me, lots of tax changes every year, but mortgage interest deductions, especially first-time home buyers, get a lot of opportunity to support their acquisition. And it's the type of thing that when you really dive deep, more than likely you're going to be able to afford a mortgage for exactly what you pay in rent or less, or you're going to be able to invest in an opportunity that's going to pay itself off in the future and in the long term, even if it's just every year on April 15th getting a larger tax refund because of the investment that you make in your home. That in and of itself would make purchasing a home more valuable than renting. But the myopic approach and the short-sightedness of wouldn't renting be cheaper is such an easy thing to say, and I want to make sure that people understand that it's not a universal answer. But typically, especially in Maryland, renting one house versus buying the exact same home is going to cost you 10% more to rent because landlords are accepting your rent to cover their mortgage. So why wouldn't you buy that home, benefit, have the tax benefits and the deferred payment benefits, and have the opportunity to build something that could be equity for yourself? Now, I think the biggest thing here is that people get concerned that their student loan debt is going to prevent them from owning a home. Their student loan debt is going to prevent them from making their monthly payments, or their student loan debt is going to prevent them from saving the money that they need to buy a house. And ultimately, that's just not true. We need to get you in touch with a mortgage lender, some of the great people that we work with that can help you get qualified for a home, put you into a position to succeed and accomplish your goals. Ultimately, I think that's the biggest value that you can do in this state of the market right now. And if you guys have any other questions, of course, reach out to us. You can always PM or DM depending on what market you're watching on. And we look forward to chatting with you again soon. I hope everybody's being super safe, healthy, and I look forward to seeing you guys all out and about in the next, hopefully month. Fingers crossed. See you soon. Thanks for watching. Make sure you like and subscribe for weekly content. Also, check out our social media pages. The links are in the description below. See you next week.